Hello, ladies and gentlemen. My name is Greg Michalowski, and this is the Forex Week Ahead with a focus on the central banks. This report is forequities.com. We just had some testimony from ECB's Draghi. Draghi's speaking in front of the EU Parliament about monetary policy. Some of his comments that did come out were congruent with what he has said prior. In particular, and specifically, he talked about employment being too high. He said that exports should benefit from a global recovery, but the risks, the economic outlook, are to the downside. On inflation, he said that if inflation was at very low levels, and to remain low for coming months. Also, inflation expectations were firmly anchored, and risks were broadly balanced. These are the comments on inflation, growth, and employment. In regard to the exchange rate, he did say that exchange rates are not a policy, but is important for the inflation outlook. If the currency remains too elevated for an extended period of time, that could impact the inflation, keep it low, and that is not good in an environment in the EU where inflation is at 0.5% with a target of 2%. They don't need that currency to be so supportive. They could also use growth from a lower euro over time. And so he's trying to jawbone the euro back to the downside, not having much of an impact, however, on the euro in trading here today. Other central bank events that are going to take place this week include the Bank of Japan monetary policy meeting and statement, which is going to take place from between Monday and Tuesday around the midnight hour before and after. And the expectations from the Bank of Japan is that they keep rates unchanged. Now, there is a report from the Nikkei newspaper that the Bank of Japan will raise their economic forecasts for the Japanese economy, and this may put off the idea that the Bank of Japan will stimulate. Currently, at the moment, about 1/3 of the economists are expecting that the Bank of Japan will have to do additional easing or additional stimulus between now and October 31st, or more toward October 31st, I should say. That may be put off if these economic growth forecasts are increased by the Bank of Japan, and that should have an impact to the downside in the dollar versus yen. If it's the opposite, if they do not do this, then we may see a short covering move to the upside in the dollar versus yen and other yen cross currency pairs. On Tuesday, we have the Bank of England's Carneys talking about the financial stability report. Any comments in regard to the economy will also be monitored by the market. Today, we saw a break in the pound versus U.S. dollar. I'm going to look at that chart in our chart of the day in just a moment. On Tuesday and Wednesday, the Fed's Yellen testifies. On Tuesday, she testifies in front of the Senate Banking Committee. On Wednesday, she testifies before the House Financial Services Committee. Expect the same text to come out of both prepared text, that is. The question and answer session will be different, however. The market will be paying attention to the bias that the chairwoman presents. At the last FOMC meeting, it was thought that she was more dovish, and that's more bearish or more bearish for the dollar. We'll see if she continues along with that bearish agenda, and we'll see how that impacts the foreign exchange market on those comments. Again, coming out at 10 or beginning at 10 a.m. on Tuesday and continuing again on Wednesday with in front of the House Financial Services Committee. On Wednesday, also at 10 a.m., is the Bank of Canada interest rate statement, followed by a press conference from the Bank of Canada's Polos at 11:15 a.m. In Canada, they had weaker employment numbers come out on Friday, and that sent the Canadian dollar to the downside, the dollar Canada to the upside. Seeing a little corrective action in trading here today, perhaps there's a little bit squaring up before that interest rate decision coming out on Wednesday. So we'll be paying attention to what the Polos says at that time. Finally, on Wednesday is the Fed's Beige Book. This is a collection of anecdotal stories, if you will, on employment growth, inflation from a regional standpoint within the United States. So it's not the macro version, but the micro version. And it's thought that the Beige Book is used as a guide for the FOMC at their interest rate decision. So that comes out at 2 p.m. Eastern Time on Wednesday. So let's take a look at the chart of the day. I promised you I'd take a look at the pound versus US dollar. And the reason why is because we're having a little breakout here today in the pound versus US dollar. Let's count the days here that we stayed above the yellow line. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 10th day, each of the day marked by these dash lines. 10th day that the market was above this 170.91 to 170.96 level. Let's call it 171 level. And today the market broke below that level. And when it broke below that level, we saw increased selling down to a low price that came in at the 170.72 level. And we've since seen the market kind of waffle back and forth over the last 6 or so trading hours. The good news for the bears, the sellers on the break of this support level, is that the market on the correction stayed below that level. It stayed below that level, which suggests that sellers were happy to sell the market on the correction up to that level and push the market back to the downside. And so that's good news for the break, good news for the sellers. And you should see, or we should see, lower prices going forward as long as the price remains below this yellow area. If the price moves back above those levels, it's just another disappointing, another failed break to the downside, similar to the one that we saw here where the market fell below that level and quickly rebounded back to the upside. We're not quickly rebounding back to the upside, but the impact would be just as damaging if the market were not able to stay below the 171 level. So risk is up there at the 171 level. As long as the price remains below that level, we could see and should see a rotation further to the downside in trading going forward. So there you have it. If you like this report and want to learn more about foreign exchange, feel free to join me every day at www.GregMikeFX.com. That's where I talk about foreign exchange every day, and every day here I also produce a video or put something up for theequities.com. Thank you very much. Good fortune with your trading. Bye-bye now.